Not bad at all after that manic Monday that transpired and after that 500-point fall that we had yesterday. Today too, to be fair, started off pretty scary because even though you had a strong handover from US equity markets overnight, Asia was reeling under pressure, and after what looked like it's going to be a 0.5% down kind of start, we immediately gapped down from there. We were down nearly about 2% at one point in time, well sub the 16,900 print as well, and then from there a gradual recovery, closing in at the session highs today at closer to that 17,300 mark. An uptick of 126 points at 17,277 is where we managed to shut shop for the day. That said, good amount of recovery played out for the broader end of the markets as well. To be fair, they were the ones which actually kicked in the rebound much ahead of even the large caps, and we closed comfortably in the green with a count of 145 stocks standing to the green today. So that was really the count when it came to the broader end of the market. That said, what really led the recovery among large caps? Quite a few names actually. Maruti reacted to its numbers. The stock held out by a solid 7%, was one of the top movers within the index today. You had an Axis Bank which held out very smartly, SBI, IndusInd Bank, UPL, BPCL, Bharti, which is going to be having yet another round of board meeting on fundraising. That stock as well was one that held out by a solid 3% in trade. Tata Motors, Hero Motocorp, Bajaj Auto, Tata Consumer, Unilever, these were all names which were looking very smart indeed. Strong numbers, of course, from Axis Bank as well aided the recovery on that stock. Burger King and Idea were some of the other strong earnings which came by. Weak numbers then for Aramco Cement, for an India Mart, Shriram Transport, Deepak Nitrite, and these stocks were under pressure today. What was also in focus, which has been the case all through last week and especially yesterday, were the new age tech companies. Zomato was under focus and lens once again, not just after breaching that 100 rupee per share mark yesterday, but the fact that its biggest competitor, that Swiggy, has managed to raise about $700 million overnight, and the valuation has now crossed $10.7 billion for Swiggy. So that really kept Zomato in focus in today's trading session as well. That said, a lot really will depend on what transpires in the Fed meeting, the outcome of which is due later tonight, something that the market unfortunately is going to be reacting back home only on Thursday morning, given that tomorrow is a trading off on account of Republic Day holiday, and then of course day after you've got the expiry for the month of January as well, the first series for year 2022. So it's going to be a very, very critical trading session. The commentary on inflation, the dot plot has already indicated that rate hikes are coming, but how soon and what could be the quantum is something that the street is going to keenly await really in terms of a commentary coming in from the Fed. So really these are the parameters that the market is going to be judging itself on. Do you read too much into the rebound of today? Are we out of the woods? The clear answer is no, because one has also seen the India VIX spike up a fair lot, and heightened volatility has really kept the markets a little edgy. So one really has to see and track the global markets movement very carefully tomorrow, even though we are going to be on a trading holiday. But that's something that's imperative, because it's a synchronized fall that you're seeing across global markets. We're not really alone in this. So one really needs to monitor what happens to global markets. But that said, a good amount of respite coming in today, and good respite in terms of a trading off as well tomorrow. We could definitely do with a day's break. So we'll catch you again with all the market action on Thursday morning.